Well, good morning, folks. Welcome to this version of the Danielcode report, which is for the 20th of May. As usual, the charts are available in the box to the right of this video on YouTube or at the Danielcode website, www.thedanielcode.com. So please, I invite you to go and get those charts. Print them out. We've got a lot of material today and there's some quite detailed work to follow. I suspect that we're actually going to have to make two separate videos to get through today's material. Some of it is quite in-depth, particularly the new stuff on time that I'm starting to talk to you about and teach you about, which I previously haven't included in these videos. Let's start with our T3 trades that we had for Monday. We had only the two signals in the markets. We had a buy in the S&P and we had a sell in gold, which of course can be executed either in COMEX gold or GLD for those of you who trade the tracking stock. We'll start then with chart number 1, which will show you how these trades are set up and what leads up to them creating the signals. So chart number 1 is COMEX gold, the weekly chart, and you'll see these charts are available at the Danielcode website. We do weekly and daily charts for gold and oil and commodities, Forex, S&P, Dow, NASDAQ, so on. So we always start our analysis with the weekly chart, and you'll see here that there are two important points to this chart. First of all, the market has come down to a recognized Danielcode number. Now, recognition of these numbers is the essential precursor to creating a signal. This is going back about 5 weeks, but I just want to take you through the process to show you how these signals originate. And you see on the weekly chart we had in fact two bars there sitting right at the Danielcode number, and looking at our fast stochastic, the 533 stochastic that we use for our weekly chart, the market is very oversold, so we are expecting a turn. From there we move on. Chart number 2 is an unusual chart that most of you won't have seen before. This is a Danielcode time chart which is for 6 trading days. Now, if you don't understand how this works, please have a look at my latest article, Masterclass, which is available at the Danielcode website or at Financial Sense. And in that I introduce you to these timing charts. Now, one of the requirements is that we use 6 trading days. Now, that's not a week, it's 6 trading days makes up a Danielcode week. So if we had a bar that, for example, started on Monday, it would include Monday, Tuesday, Wednesday, Thursday, Friday and the following Monday, which means the next Danielcode week would start on the Tuesday and run through to the following Wednesday. So why we do it this way is set out in that article, Masterclass, that I've referred to, and you will see that when we get this base timing right, which I don't think anybody in the world has ever done before, certainly I've never been aware of it, you will see that all these time cycles come to life, and that was, I do ask you to read that article if you haven't already read it. It explains what this is about. But on our 6-day timing chart, you'll see here that we had at the weekly low that we're talking about two very important time cycles expiring. We had a 31 DC week period. Remember, these are Danielcode 6 trading day weeks, not normal weeks. We had a 31 DC week cycle expiring, which is half of the 62 cycle, which is very dominant in financial markets. And from the low after the March high, we had a 44 DC week cycle expiring, and that's pretty well dynamite in gold. 44 is the most common vibration for gold. I'll be doing an article on this for Financial Sense, which will be called Masterclass 2, in which I will do the timing for gold. So many of you were interested in Masterclass article and the timing for the S&P, and of course I've been rushed with emails saying, well, tell us how this works in gold. So I'm going to do just that in the next article, which will be published at Financial Sense and at the Danielcode website, presumably on Friday. So We have from chart number 1, you can see that we have weekly time right at our Danielcode number, and weekly support rather at the number, and from chart number 2 we have time. So we have got a high probability set up on the weekly chart. We then go to our daily chart, which is chart number 3, and you'll see that the chart has changed slightly. For the weekly charts we use the continuous chart. Genesis codes that as 057. That means that it's the front month contract and they're just all bundled together. They're not back adjusted on the 057 code. For the daily charts we use, of course, the front month. So chart number 3 is the June COMEX gold contract. I'm showing you the same thing there, how once we get down to a daily chart we look for exactly the same thing. We look initially for recognition of the Danielcode price targets, and we get that on chart number 3 on the daily. Chart number 4 shows you what's been going on in gold, and it shows you the signals that I've been creating for you or for subscribers at the Danielcode, and you can see that we've got pretty well every turn since April the 14th. We had a sell on that day, it went down into late April. We had a buy for April the 20th, it went up into April the 24th. We had a sell on the 24th which turned on the 25th, it went down into May the 1st. We had a buy signal on that date, and then we got the big move up. We had a gold sell signal on May the 14th that was not elected. Now, very important these TO3 signals be elected, otherwise they are meaningless. And if you go to the Danielcode website, have a look under the videos tab, you'll see a video called TO3 tutorial highlighted in red very prominently. If you go through that, you will see exactly how these TO3 signals work, how to trade them, and what being elected means. In any event, that signal was not elected, but 2 days later we got another TO3 signal on the 18th, and that of course was elected, and that's been the recent reversal in gold. Chart number 5 just shows you the sequencing of what's been happening since I spoke to you last about gold. Our buy signal gave us $44 or $4,400 per contract, per one contract, from the closing low to the closing high. I'm not suggesting you could have got all of that, but you should have got a good part of it. And then, of course, with Monday's reversal signal, $16 or $1,600 in that trade. So we've done very well in gold. It's been fortuitous, been good trading, and great return for your investment. And I invite you to come to the Danielcode website where we have these TO3 signals for you every day, and they've been absolutely marvellous, particularly in gold, as you can see from this chart. Everything